Hi, everyone. Welcome to a new edition of the India InsurTech Podcast. Today, we have with us Vishal, who's a senior partner at Ediplis Counsels. Ediplis Counsels is an award-winning law firm. It was formed by individuals who had nothing in common other than their inspiration to make law simple and understandable for businesses and for making law a tool for harnessing business potential. Today, we'll be discussing with Vishal more on compliances for InsurTechs. And so, hi, Vishal. Welcome to the podcast.
Hi, Prashant. Thank you for having me here.
No, of course, of course. I think what we want to do is discuss, more about compliances for insurtechs. I'm sure a bunch of our members are also keen to know more on this. And I'd like to start by understanding from you an overview, broadly of the compliance landscape for insurance and its ecosystem in India. We'll start with that, and we'll then delve deeper into the other aspects.
So, insurance, if you see in India, a regulatory body was set up in around 1999, and thereafter there have been number of regulations which have come up. Originally, there was like 4 or 5 PSUs, and around 2001, 2002, private insurers started entering into this phase. And today, India is counted as one of the top 10 insurance market in the world. Now, if you see like IRDAI, they have come up with a slogan of insurance for all by 2047, which
Right.
will result into multiple increase in insurance penetration across the country in the coming years. Last 2 years, there have been multiple changes in all the regulations, guidelines issued by IRDAI. They have come up with new consumer protection guidelines. They have come up with new corporate governance guidelines. So they are trying to bring this entire sector into a different shape than how it was before. They are working to make it more agile. They are going meeting different insurers, reinsurers to understand that how this sector should work. There are a lot of pricing models and everything on which IRD is working very aggressively. Now, if you see for an insurtech, it is divided into 3 major parts. One is if you want to be registered as an intermediary or an insurance company. Secondly, what are the pre-sales activities and what are the post-sales activities? For registration, there are separate regulations for all your broker, corporate agent, IMF, and everything. So depending upon what is your need, you can decide to go into a specific phase. Secondly, pre-sales, so there are new product regulations which have come last year. Then there are corporate governance guidelines, which all will take care of, pre-sales conduct. And then post-sales, when it comes to say a claim, a after sales service of the policy, any grievances by the customer. So all these areas are revamped by IRDA in last 2 years. For a insurtech, what is most important is regulatory sandbox. So this regulation was issued by IRDAI in 2019, and the latest version has come in 2024 now. So this regulation actually gives you a platform through which you can do innovation in insurance. You can bring out a new product, test it on a small subject base, and once you prove the concept, then you can go for a larger product around it. Now,
Right.
earlier, this regulation has a 6-month timeline that within 6 months you have to test. Now that timeline has increased up to 36 months. So you have a longer duration in which you can test the product to see whether it will work in long term or not. Similarly, earlier they were doing a batch approval that say they receive 10 applications, then they'll go and verify all these applications whether we can approve or not. Now they are doing a very seamless verification, this approval of the applications. So as and when the applications come, they start working on it. So which give a lot of boost to these insurtechs. Like we work with few insurtechs, and the kind of products, the kind of innovation they do is very different. Which like I am working in insurance since 2006. However, there are products which we have seen in last 2 years which were not seen earlier. The way these insurtechs they are working, they pick up a specific piece of insurance and work on it. For example, say mortality rate after age of 60, how it is going in India, how it has changed in last 30, 40 years. So they work on these data, and basis that they are suggesting new products, they are suggesting new changes, they are suggesting new algorithms, which these entities can use. From regulatory side, if we see, so there are there's an insurance trinity which is coming up, which is Bima Sugam, Bima Vahak, and Bima Vistar. So Bima Sugam is basically an online marketplace which will take care of all insurance sales, post-sale services. So everyone can provide their services through, it's like an exchange through which everyone can provide services. So it has its own set of regulations which will be governing it. Then Bima Vahak is to increase this insurance penetration in the country. So this is more of a woman-centric approach by IRDI that they can involve more women in sale of insurance.
Okay.
Lastly, there's a Bima Vistar, which is like instead of going for individual product for every coverage, you go for a combo product or a single product which will provide you all coverage, be it life, be it health, be it general insurance, be it your say fire insurance and all those. This all will be covered in a single product. More or less, this is how insurance is changing across the country.
Got it.
Now,
Got it.
more,
Yeah,
sorry.
sorry.
Yeah.
Go on.
So now they are more focused on technology. They are more aware consumer rights on which they are working.
Got it. Okay. So, so I think this is quite detailed and interesting. What I'd like for you to do as a crux of this is, can you give us what's special out of these things? What are the two, three special things that are very pertinent and relevant for InsurTechs specifically? For example, I know you're going to say the regulatory sandbox piece is one thing that's special, but I'd love for you to go on and give us an answer to this.
So if you see how a insurtech can enter into this industry, so there are two or three ways. One is that they work in the background. They provide their technology to someone, some insurance company or some insurance intermediary, through which they help this market to develop. So
Yes.
mostly this regulatory sandbox or maybe outsourcing regulation will work for them because they are, say, acting as an outsourcing partner for any of these entities. However, if they want to be more integrated, they can go as an insurance company where they launch their own products, okay, and have their own claim underwriting, their claim processing, everything, which I understand with these insurtechs, it will be more tech-based rather than individual-centric. Or they can go into insurance distribution. So
Okay.
so they have to uh, concentrate majorly on how these products are innovated, how they are being sold, how claims and settlements are taken care of, how to ensure protection of policyholders. Now, with all these tech platforms, a newer challenge will be how to ensure that all these money laundering compliances and all are taken care of, which is now a major aspect. The kind of fraud we see all around, anti-money laundering, counterterrorism aspects, they need to be taken care of. Cyber security, data protection. Data protection will be very, very important in light of the new DPDPA. Once the rules are out, so there'll be a lot of new changes. We'll see the penalties for any violation is skyrocket. So
Yeah.
they will have a major impact on these insurtechs.
Got it. Okay. And is there any difference in the compliance requirements for, the traditional insurance companies or distributors, intermediaries versus the insurtechs, or it's more or less the same?
The per se compliances will always, as I said earlier, they will be depending upon what role you want to play.
Hmm.
Accordingly, compliances will vary. As I said earlier, that if you want to be, say, an outside party who's just contributing through some other entity, your compliances will be very different. You want to be integrated, you want to be first hand on sales, first hand on innovating new products, so then all these regulations will come into play. For example, regulatory sandbox, not maybe not a lot of insurance companies will use it, but a lot of insurtechs may use it as a tool to test
Mm.
their products.
Yeah. Okay. Okay.
Similarly, Bima Sugam, once this platform will come into place, it will have more say for insurtechs. They'll be able to do more innovation on these platforms. If they integrate themselves with the main industry, there's a possibility that the capital requirement for them may be different. IRDA, when they see that a lot of these smaller entities or the newer entities, I won't say smaller, but the newer entities who are entering and their kind of products or kind of innovation they are bringing in, which will change the entire landscape, which will help toward their vision of 2047, they may come up with new requirements for lower capital requirements and all those for these entities. Also, I understand this collaboration and cooperation with each other will take them a long way. Now, not everyone can develop a entire universe. So there'll be some insurtechs who are building one part of the fragment, some building one part of the fragment. They coming together will bring in new difference in the entire game.
Got it. Now, building on what you said in the conversation we're having, I'd love to understand the importance of agreements for insurtechs.
So why agreements are needed? Today, when we enter into an agreement, the rights and obligations of two parties are decided. That I have this role to play, and you have this role to play. Maybe if I don't perform my part, it's impossible for the other party to perform their part. So that's why these agreements will play a very important part. They they will help you limit your liability. If I don't enter into an agreement tomorrow, worst case scenario, say a loss occurred because the product failed, then I can't be sitting on a liability which will eat up my entire organization. So I have to limit it somewhere. Plus, if I have dependencies on other party, if the other party does not perform their part, I cannot be guilty of
Yeah.
non-performance of these contracts. I have to protect my intellectual property. All these insurtechs, they are coming up with new codes, they are coming with new technology. Unless that is protected, you'll always find some larger entity who will try to eat up them. That
Yeah.
you work for me, this code belongs to me. If you work for me, this I can use this technology endlessly. So these need to be protected. How all these things will be done? They'll be done through this agreement. They'll take care of their day-to-day confidentiality. That how data confidentiality need to be maintained. What will happen at the end of the agreement once they say stop working with the entity? How will their codes are secured that the entity will not use their code in any other manner? So that's why agreement will play a very important part. They can help them anticipate that in 3 year time where I'm standing. If I continue with this agreement, what is the open liability I'm looking towards?
Yeah. Okay. Okay. And also, if you can take us through some important clauses that are again catered specifically to insurtechs. Are there any such clauses, first of all? And if there are, if you can take us through a few of them.
So how these insurtechs are working? These insurtechs, they are firstly developing their own innovative products, softwares. They're writing their code. So intellectual property protection is one of the foremost important thing for them. Secondly, your data protection, because the moment they start receiving data, they'll have certain obligations as data processor. So they need to take care of that. Thirdly, your liabilities, what liabilities you are agreeing to, whether there's any unlimited liability. If there's an unlimited liability, how it has to be defined that this liability is there on you. To say tomorrow I enter into an agreement, there's a breach on my side. Other party say you have done this breach, you pay me 5 crore rupees.
Yeah.
My value of entire agreement is say 50 lakh rupees. For 50 lakh, I can't be paying 5 crore rupees. So these
That's
are
right.
the things which I need to take care of. My limitation of liability, that where my liability will be limited. Okay. Also, how to ascertain that liability. There's a particular amount up to which I am okay to pay the amount basis understanding between both parties. However, there can be a higher amount for which I want a judicial process to go around. That unless that judicial process is put into motion and they decide that I have this liability, I should not be made liable to pay that amount. Then
Okay.
so what your open risk, whatever is there, they are a very big contributory factor to your downfall. So we have to limit these open risks. If we are able to limit these risks, I'm sure they'll have longer lifespan.
Right. No, of course. And you mentioned, right, that a bunch of these compliances are taking new shape. IRDA is now more agile. Things are moving for the better. Now, from your vantage point, and you've been in insurance, you mentioned, since 2006. I'd love to know, where do you see compliances moving forward? What do you see happening in the next, say, 5 years, 10 years? Do you see, micro insurance, even more micro insurance regulations coming in? MGAs are also something that IRD was talking about. Do you see a lot of these changes coming in, and what are those, let's say, three specific changes that you see coming in the landscape of insurance and compliances?
So first and foremost, we are standing at the doorstep of DPDPA, Data
Yeah.
Protection Act. So
Yes.
the moment that will come in, that will be the first regulation, and the moment this regulation will come in place, I'm sure IRDA will have its own set of rules to ensure that there is a compliance with these larger act. Secondly, a lot of companies are using AI data algorithms. So there may be some uh, some regulations which will define the four corners at how you can do AI-based underwriting. How will you ensure transparency? How will you ensure fairness when you're using AI? That be there. And lastly, I see ESG, environmental, social, and governance, because they are now becoming one of the most important regulation all across the globe. That when you are doing any act, you also have to see that how people around you are affected by it. You
Right.
ensure that there's a social upbringing happening for the people. You ensure that there's a governance being followed. You ensure that environment is not getting damaged. So if you remember when COVID happened, IRDI came up with a regulation that you can send the policies on WhatsApp and through emails,
Correct.
messages. So that I don't have the data, but I'm sure that has resulted into a lot of paper being saved, which will have
Correct.
its own environmental impact.
Correct. Yeah. Oh, yeah. That's brilliant. I think these were some great insights I took away. This was brilliant, Vishal. Thank you so much for your time.
Absolutely. Thanks a lot for giving this platform.
Thanks.